Good afternoon, Scott Redler, T3 Live. Welcome to today's recap, the pre-holiday Thanksgiving recap. One of my favorite holidays that will be upon us tomorrow. I think it started early today. I saw a lot of people running around the city having holiday lunches, and rightly so. It's been a long year. We have a little bit left, and you should enjoy holidays. Holidays are awesome. You spend time with your family, your friends. Hopefully you're not going to Walmart at 7 o'clock at night and going on Black Friday. I would rather you be on the couch, enjoying the last part of your dessert, maybe your third or fourth bottle of wine. No, maybe second bottle. It depends. Anyway, with that said, hopefully I would like you to be in a nice frame of mind. And since Friday up until today, I feel like we had a very conducive market to make some money. And we've tried to guide you through it. On Friday, when the outside day happened, the Red Dog reversal, you name it, day one, it was a time to switch gears. Time to cover some shorts, get long, make some active cash flow, hopefully trail some long. If you followed us on the virtual trading floor, whether it was just a spiders and apple, it didn't matter. You could have been in a lot of things. You made some money. And then Tuesday, Wednesday, you had a lethargic trade, but it was lethargic to the upside. In the right place. We talked about holding above the 200-day digestion, leading us to maybe 1403, 1407 in the SPX, which is like 140, 50-ish on the spiders. So you can time the market. That's what we try and teach you here is you can time the market. In the past decade, we've had over 300% or so of movement. But if you bought something potentially 10, 11, 12 years ago in the S&P, you might be at the exact same spot. So what we're here to do is teach you how to maneuver the intermediate sweet spots so you could actually make cash flow from the market, let it add value to your life versus getting smacked around like the media would like you to believe the retail investors should be. If you look at the chart of the S&P or the spiders right here, you will see, remember this low on June 4th wasn't very powerful, but it had a nice 2-3-day move thereafter. And then you put your little line in here. You saw some commitment going sideways for a while there was a lot of stocks to be traded. So it turned into more than a cash flow trade. It turned into a nice trend. Then went sideways, broke this trend, broke the 8 and 21-day moving average. Tech was leading us lower. Good spot to take risk off, about 144 in the spiders, maybe even 1435 in the SPX, and then from there we went all the way down below 135. So about 8-9 points in the spiders and 90 handles in the S&P. So finally on Friday we had the reversal. You had your outside day. Question is, what's it going to lead to, guys? Is it just a nice cash flow trade, a little bit of a fix going into holiday weekend? You know how many people email me saying, Red Dog, what do you think? Do you think it was just the forces at will wanting everyone to go out and shop, feel good on Thanksgiving, we were oversold, the bears are going to take control? I was like, it doesn't matter. You book your trade, you take your profits, no one's going to take your money away unless they hit you over the head, rob you, and then they go to jail. You take the meat of the move off the table. That's why we say trim and trail. So you could book some profits and then stay if there's more than that. And as of right now, I would say you have to be more neutral to positive versus neutral to negative like we've been since October, since the technology sector broke the 50-day right around October 9th or 10th, and when IBD went into a market correction. So now today was day 4 of some nice movement. You go back to the chart, and what have we seen? You saw a day 1, nice follow through to your outside reversal, which was right here. And then we held higher. We've just done some nice work. The market took back the 200-day moving average. We've been edging higher. And the next level probably comes in right around here. A lot of nice little trades. Apple, at this point, nice reversal. Here's your Red Dog reversal. There's 522. That could have been your entry. Some people got involved, buying the cascade lower, which was definitely scary, but a bit more profitable. You had a nice follow through thereafter. And look at it right now. It's holding higher. Apple is holding higher. Apple is showing you some commitment to this move off the lows. So it's worthy of being in less. Less than you had here, less than you had there. Stay with it. At some point, after a bit more movement, maybe a little bit more sideways action, maybe it could be Friday, it could be Monday, it triggers above 572, gives you an additional trade back to higher levels, maybe even back to at some point going into Christmas 600 and change. A lot of guys on the weekly chart are talking about the potential of this head and shoulders top type pattern, but who knows? You don't know that yet. At this point, all you know is you finally had a nice reversal coming into this area. Nice weekly bar, and if it was going to form a head and shoulders top pattern and be very bad for the market, it'll probably come in like this, right around here. So what does that say? It says doesn't mean you should be short right here. It means that you have some more room to about 595, 605, and then that's when you have to really look at the action very closely to see if we get this macro head and shoulders pattern, which would be very negative for the overall market. But as of right now, I'm not in that camp yet. I'm just throwing it out there just so people could be aware. I don't want people to have rose-colored glasses on Apple thinking it's going to 1,000 tomorrow. At this point, it's worthy of a buy. You have your reversal, nice little trade here. And at this point, it could see another 40 to 50 points on the upside before making, getting into some really big resistance. So with that said, that comes in right around here. At this point, we've seen some commitment. You put your Fibonacci retracement in here, and all in all, things look okay. It held the top 25%, so that means if it's going to stay here, it should go quickly. Things that hold the 25% retracement off this low, typically they only consolidate 3-4 days. If it came back to the 0.38% or the 50, then it's choppier. So here is something that is worthy of your attention. So with that said, Facebook's been another trade for us. I started talking about it a few days ago. First things first, on the lockup day, I talked about potentially buying it. Had a really nice move back up. Now, coming close to this gap and nudged into it. Didn't close near the exact highest, but I do think that it's worthy of a trade. I'm still long some. I talked about it on the site. Got involved in this flag type pattern, added a little bit here. I do think this is the type of trade that can continue, at least fill a big portion of this gap, or a small portion is 25.50. So at this point, I think technically the signs point to more upside. I know it's been a disaster IPO. It failed right there. Boom. Broke this area. But now we have a 4-month base where you've seen some volume spikes. You want to put basic studies here. You want to look at some volume. You can see volume has come in a little bit here, a little bit here. So I would just say I do think the path of least resistance on Facebook is to the upside. Hopefully you made some money. You've been following us with that. With that said, you can't say Google's acting so great, but it's hanging around. I drew this supports area after the earnings when it was halted. It's holding it. It definitely needs a little bit more time. Got a little scarier today, but all in all, it's still okay. Amazon, a little bit more powerful. This held the 200-day, nice 4-day move. You can time this. If you got out, when it started to break this upper area here, broke it, retested, went lower. Why not once it reclaimed the 200-day? Let me get this volume off of here so you can see a bit more cleaner charts. So all in all, pretty good price line. We started talking about the relative strength here, about the gap holding above the 200-day. This was after earnings. It broke this descending little channel here above the moving averages. Something to stay with. I can't get it into all right now because we all have trains and ferries to catch and families to see. I've spoken about Bank of America, relative strength. I'm still long some Bank of America. Looks good. It's right near the highs, above all these key moving averages. I do think that Bank of America has a destiny with $12 or so. I don't know if it happens this year. It might happen in the first quarter of 2013. But all in all, you look at the weekly chart of this stock, and this stock is showing me that it could see higher prices, and there are a lot of guys at Merrill that would love it, a lot of guys across the board, and at this particular point, this pattern's getting tight above 10. You then have a move to like 1080, and then no reason why I can't see about 12, so I like the way Bank of America is looking. Silver looks pretty good too. Silver, you go to the daily chart. I've just re-entered silver for the first time today in a while. Last time I traded silver was right here, right when it broke above this key area, and we had a really nice move, came back, tested the 200-day all the way down here, bounced off it, holding higher, nudged above this little area. So it's worthy, in my opinion, of a take-home. I know that it failed at bigger resistance way back here, going across. So did gold, but I do think that it's worthy. If you're looking for some kind of long, something to be involved in, even gold right here. Gold looks like it's setting up. You have a predefined resistance. You have a nice little wedge in place. But wedges, it's much safer to get involved when they're resolved. It could still resolve to the downside, but overall, I think it's holding up well. 168 and change is your level for motion. So it's something to hopefully have a tier 1, and then we'll see how it acts. And I'm sorry, I just can't get into everything. all I wanted to say is that you had a nice move since Friday. Tactically, you could have made some nice money. For the last month, we've been very tactical, on the short side, playing small bounces. Finally, you had the reversal. You actually had the luxury of buying on Friday, staying with a portion of the trade, trimming, trailing, trading around it. And at this particular point, I still think the market's a bit more constructive, not something to throw, dive into. It's something to test the waters, stay with. I do think bears will try and make a stand around 1403, 1408 if we get there. Maybe we get there Friday, maybe we get there next week. Who knows? We still have to resolve the fiscal cliff. We still need, a resolution in Greece. We still don't have a ceasefire in Israel, so there's still a lot of unknowns out there in that wall of worry. So if you're holding 4 to 8 positions or something like that, have a hedge. I'm not exactly sure what I have on right now, but I think I have 4 or 5 positions, and I took the spider short just in case something happens over the holiday that you want to, have some type of hedge if we open down so you don't fall asleep at the wheel. And I just think that the last 4 days was very conducive for traders. It played by a lot of our type of rules, and hopefully you benefited from it. So this way you go into the holiday and you're feeling confident, you're feeling happy, you can enjoy your family, you can enjoy the holiday. And if you're not, blow it off. Let it, roll off the shoulders, take a break, recharge your batteries, and come in after the weekend just feeling, ready to go, ready for December, ready not to chase, ready not to revenge trade, and just ready to take it as it comes, because Christmas, December tends to be a really volatile type of trading environment, or very conducive for traders, and I'd hate to see you miss out on it because you feel as if you missed the past 4 days. So we'll let it come to us. So all in all, enjoy your family. I love Thanksgiving. Hopefully you eat well, you drink a lot, you watch some football, you spend time with your family, and you have a good time, because life's way too short and you're dead way too long. So enjoy it. See you soon. I'll be in touch with Twitter here and there over the course of the next day or so, and I will be online Friday, but I will be trading remotely and I won't be as accessible. Have a great holiday. Talk to you soon.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.